Hi there, you are highly welcome to my educational platform. I am really happy to be with you here in this course. So, this course is going to teach you the IFRS 16 leases, a new standard. As you know, it's becoming a very important area. From this course, you will learn the initial development of IFRS 16 leases, and you will learn the lease accounting and leasehold accounting with practical examples and theoretical knowledge. A little bit about me. My name is Tom. I am a financial auditor and IFRS instructor. So let's get started. The overview of IFRS 16. The IFRS 16 was introduced in January 2016 and is effective from the 1st of January 2019 mandatorily. So the development of IFRS 16 has been developed since 2016, and companies could apply IFRS 16 before 2019 voluntarily. Since 2019, this standard has been mandatory for all companies who have lease contract to review their leases and apply this lease. So the most important thing that the previous standard was IS 17 has been replaced to this new standard IFRS 16. So if you have a little bit background on IS 17, IS 17 used to classify the leases into the operating lease and finance lease. For the lessee, this is similar to the approach used for the leasehold accounting under the new standard IFRS 16. In the leases books, operating lease were not recognized as liability in the statement of financial position under the previous standard IS 17. Instead, the lessee rental was booked as expense in profit or loss. So the previous standard IS 17 did not recognize the right of use an asset and lease liability. However, the new standard obligates companies to recognize lease liabilities and right of use an asset. The objective of this new standard, is set the principles of the recognition and the measurement of presentation and the disclosure of the leases. In addition, is to ensure that both lessee and lessor have given the relevant information, that those transactions are fairly represented. Because in the previous standard there was lack of information regarding the leases. The lessee did not show the lease liabilities and right of use an asset in the previous standard. So the new standard has obligated companies to show the right of use an asset and lease liabilities for the lease under the lessee, and for the lessor also have shown the relevant information about the lease contract. So IFRS requires lessee to recognize assets and lease liabilities for all leases with term of 12 months and underlying asset has no value, or the lessee should recognize lease and lease liabilities and right of use an asset if and only if they have the lease contract that lasts more than 12 months and the underlying asset is classified as the no low value. If these two conditions are met, the lessee recognizes right of use assets in the financial position, and as you see from here, this is as underlying asset. That underlying asset is assets that are provided by the lessor in order to be used by the lessee in exchange of consideration. And then we have the lease liability in the financial statement also, and this would be the considerations, the repayment of this would be the repayment of using these assets. So this is called lease obligation. For the short-term leases or low values assets, the lease payments are straightly charged to the profit or loss. So the short-term leases and the low-value leases are excluded from the recognition of the right of use an asset and lease liability, and we will explain later on what does mean the short-term lease and the low-value assets. For the lessor, nearly the same. For the lessor accounting, nearly the same to the IS 17. He will continue to distinguish between finance lease and operating lease. Under the lessor accounting, there is no significant change. The lessee will continue to distinguish between the finance lease and operating lease.